Well, I think it's not as serious as people think. I mean, it's never a debt can always be a problem, but the first thing is to think about public debt in China. Central government debt is about 20% of GDP, right? Local government debt is probably another 20%, right? So that's 40% about. Now, in comparison, in the U.S., central government debt, federal government debt, is almost 100% of GDP. And you know what it is in Japan? Japan is 250% of GDP. All right, so it's all relative. So actually, from the point of view of government debt, China has no problem. All right, okay, so that's point number one. Number two is that when these various organizations like the IMF talk about Chinese debt, they are really looking at corporate debt. Now, corporate debt, it is true, has been rising very fast. Okay, I think it is now at around 165% of GDP, something like that. But what is different about corporate debt is that the corporations have net worth. You see, I mean, basically, government debt has to be paid, but the government has no real assets to sell, right? But corporations, they have net worth. They have positive market capitalization. They have assets. So you really cannot compare this corporate debt directly with public debt. Right. So for example, if China actually has 165%, or if you add that to the government debt, over 200% debt to public debt, is something to worry about. But this is not public debt. 165 is corporate debt, and corporate debt is backed by corporate assets, right? And as a group, it's positive. There are more assets than liabilities, right? So I think that is one thing, is not to worry about the debt so much.